is a club? And how does taxation work for clubs? Sound confusing? Let's see what news today. A workshop for club taxation? Sound interesting. I should join this.
Assalamualaikum everyone. Welcome to today's workshop. I'm sure that you guys are excited to know about tax competition in club, right? So today we have 6 panels to explain about these topics. Without wasting our time, let's hear the explanation from our panels.
Clubs and societies are usually formed for various purposes such as social, recreational, sports, arts, science, literature, or other leisure interests that benefit their members. They are generally not-for-profit organizations, meaning they are not created to make profit for any individual. Instead, they are run by and for their members. In Malaysia, all clubs and societies must be registered under the Societies Act 1966 to operate legally. A relevant case we can refer to is Kowloon Stock Exchange Limited versus CIR, where the court defined a club as an association formed not for business purposes. Basically, the club must not be set up to financially benefit its members unless it's something incidental or unintentional. In terms of membership, the term members refers to those who have the right to vote at general meetings. They are the ones who make major decisions and have effective control over the club's or society's affairs.
As for the tax treatment, a club is normally set up to service its member and as such may rely on the principle of mutuality for tax exemption. So here are the examples of mutual receipts for members, which are the entrance fees and member subscription fees, drinks and food sold at the club, association institution bar and restaurant to its members, amounts paid by members to attend dinners or social functions organized by the club, and amounts paid by members to attend a talk, presentation, or workshop organized by the club. Next. As for the principle of mutuality, the principle of mutuality means a person cannot make a profit from dealing with themselves. So, any money members pay to the club, such as fees or subscription, is not taxed. If the club collects more than it spends, the extra is not counted as income. When the club is dealing with the non-members, the principle of mutuality no longer applies and exposure to tax can rise on any surplus that may occur. If the club does business with non-members, the mutuality rule doesn't apply and the profit made from these dealings can be taxed.
Next, I will continue to the accessibility of receipts from members. With the effect from year assessment 2009, any income arises from transaction with members shall not be taxable under the Act. There are 3 income that is included, which are first, interest fees and subscription received from members. The next one is provision of services to members for a fee and sales of goods to members. Therefore, any expenses or capital allowances attributable to such incomes is disregarded, as the income will not be taxable and will be recognized as nil. A separate income in respect of income derived from its members and non-members must be maintained, thus any loss derived will be disregarded. However, income generated from the provision of trading facilities to members is deemed to have carried on business. It will be deemed as trading receipts and assessed under Section 4A. It is a bit confusing to understand. Therefore, let me explain based on the first examples. The recreation club let an outside gym operator use part of its space and collected rental money from them. Even though the people using the gym are club members, the gym is run by a separate business, not by the club itself. Because the club is earning money from an outside business, which is the gym operator, this rental income is considered taxable by the government. It's not just money shared between the club members, it's income from a business deal, so tax must be paid on it. So it must be a little bit confusing, right? So let me explain on the other examples related. The association lets one of its members to run a cafe inside the building and collects 1,000 rent each month from that member. Even though the cafe operator is a member, the rent money the association gets is from a business activity, not just members sharing the cost. The association must pay tax on the 1,000 rental income. The member running the cafe also has to pay tax on the profits from the cafe.
So next is the income from non-members. So starting from year assessment 2009, club will have 2 sources of income, which are from the members and non-members. So non-members are individuals who are not entitled to vote at the general meeting of the clubs and societies and do not exercise effective controls over its affairs. So firstly, for trading activities such as operating restaurants, entertainment outlets, or yoga classes that were derived from members and non-members are subjected to tax. In the other hand, for cash donations that we receive from members or non-members is the capital receipts and it is not taxable. So this is the types of non-member income that are treated as business income. So firstly is the fundraising activities or events open to the public. Secondly is the rental received for hiring out the club's hall, facilities or equipment to the public. Thirdly is the amount paid by non-members for attending dinners, social functions, talk, presentations or workshops. Lastly is the proceeds from non-member on charitable event. So these types of business income will be subjected to tax. So moving on to the computations of adjusted income from non-members. So we will start with the gross income from non-members and deduct it with revenue expenses by using the formula of A times B over C, where A is the common revenue expenses, B is the gross income from transaction with non-members, and C is the total gross income from members and non-members. This will give us the adjusted income, and it needs to be deducted with capital allowance by using the formula D times B over C, where D is the common capital allowances, B is the gross income from transaction with non-members, and C is the total gross income from members and non-members. The final figure is the statutory income, which will be subjected to tax.
Next, I will explain about donation. Amount of donation must be apportioned as follows: G times H over I. Let me explain what's the meanings. G is cash donation under section 44 subsection 6. H is aggregate income from transaction with non-members, and I aggregate income from transaction with members and non-members. Also, please remember, cash donation to approved institution are entitled a deduction up to 10% of the aggregate income of the club and society.
As for investment income, both rents and interest will be accessible in the hands of the club. Because the principle of mutuality does not apply, this means that any sums received from non-members are treated as income and are therefore taxable. They cannot be considered the same as contribution from members, while dividend received are tax exempt under the single-tier dividend system. This means the tax has already been paid at the corporate level, so there is no further tax on the recipient. Is the tax computation? Let's start with members. Income from members falls under section 4A, but usually is not taxable due to principle of mutuality. Expenses related to this income are ignored, so we just show the gross income, then move to the adjusted income. And finally, statutory income, which is usually not taxable. Now, for non-members, income from non-members is taxable. We start with gross income, then deduct with direct revenue expenses, and common revenue expenses, which is a portion based on income. This gives us the adjusted income. Then we deduct common plant expenditure, capital allowance. Then we got statutory income from non-members. Next, we add any investment income to get the aggregate income. From the aggregate income, we deduct approved donation. Then we get chargeable income, which is the final amount to subject to the tax. Let's take a look at the example for computation of income tax payable. Start with non-members, section 4A business, totaling to 120,000. Last with wholly and exclusive expenses with direct expenses, hotel hall rental, 28,000. And common expenses, apportionment on gross income basis to get adjusted income. Then less the capital allowance, apportionment on gross income basis to get statutory income. Last with section 4D rental, 200,000 less allowable expenses to get aggregate income. Then last with approved donation, apportionment on aggregate income basis to get chargeable income. The tax rate is subjected to scale rate. As for the exemption, only state clubs affiliated with the Olympic Council of Malaysia may apply the exemption, which falls under two conditions under para 26 school 6, which is the first one, income of national amateur sports organisation certified by the President and Secretary of the Olympic Council of Malaysia and affiliated during the basis year for any year of assessment. Second, income of state amateur sports organisation certified by the President and Secretary of a national sport organisation and affiliated during the basis year for any YA. In both cases, the income is exempted from tax for that YA.
Next, we move to record keeping and tax filing. For record keeping, clubs must separate the income received from members and non-members, and all records must be kept for 7 years in case the tax authority needs to check. For tax filings, clubs need to submit their tax return every year. The deadline is on or before 30 June in the following year assessments. For example, for income 2024, the tax return must be submitted by 30 June 2025.
Wow, that is such a great explanation from our panels. I hope that you guys can understand it well, and thank you for lending us your ears. Thank you.
Oh, now I know how cloud taxation works. I'm glad I joined this workshop. It really helped me understand things better.